Is this time different? And is the news out of China as good as we think? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Great to be here with you. Sunday, February the 17th. And of course, the markets continue to churn higher. And of course, we had the big reasons maybe on Friday was the potential good news out of the China trade talks. And of course, they're coming back here this week. But there's a few things that I look at from these trade talks, and I have to wonder if you noticed a lot of the commodities got hammered. Okay, a lot of the softs got hammered on Friday. Although soybeans were slightly higher, corn and wheat were lower, cocoa was lower, sugar was lower, and I'm just wondering, is the news as good as they're making it out to be on Wall Street? Are we seeing the end of this retail rally? You know, we are trying to be convinced that this time is different, and of course, I think the big question is what is the Fed? You know, the Fed is trying to convince everybody that they've got a better handle on this situation, and why would we believe them? They've been wrong for 106 years now, so why would we expect them to be different? Okay, again, when you have to continue to feed free money into a system, to me that doesn't make anything different. So when we look at the trade wars, which we said, okay, from the beginning that they would be settled, and we are still 100% certain that it will be settled because, again, China needs us a lot more than we need China, and something is going to get done. And whether it's done by the March 1st deadline or whether it's done later, I think you'll probably see, if things are happening in a good manner, I think you'll probably see an extension. But certainly, something will get done, but the way a lot of the products that would be directly affected to these are kind of concerning because you would expect to see those products take off as well. And tie into the fact you have a stronger dollar, stronger gold, okay, and stronger treasury bonds, which are all somewhat of fear assets, that would make us be a little bit concerned about what's going on. Again, I think they'll be settled. I believe personally that the numbers have been priced in and the news has been priced in. And as we have said over and over again, we're not shorting this market yet. It is not time to short this market yet. So there's no reason. We will stay long. We have been long and we are staying long, although uncomfortably so. But I think when you have to understand is you don't want to fight the market and fight the tape of what's going on. You know, of course, a lot of big news last week was the Green New Deal from Cortez, and of course her basically almost single-handedly forcing Amazon to leave New York. Now again, I understand the amount of perks that Amazon was getting, but is it going to be easy to replace those 25,000 jobs? Is it going to be easy? You know, that Long Island City location was going to get a major boom, and of course a lot of people invested in that. I think when you look at it, you have to ask yourself, is that the right decision? Now again, Cortez, AOC as she is known, I have no problem with her. I mean, again, I don't agree with her politics, obviously. But again, at the end of the day, I give her credit for at least being aggressive and active and full of enthusiasm and energy. Okay, I don't have to agree with her, but it's nice to see one of those people from that area to get off their ass. So again, I think that, you know, when we look at it, of course, this is, I think, is a big problem for the Democratic Party. They're so diverse. They've got like 5 parties within one party now. Of course, I think this goes into the same breakdown of the political system that we have. You know, again, as I've said, and I will repeat, I am more of a libertarian, and of course, I think obviously it would be nice to see a libertarian be able to get on the ballot. It would be nice to see, you know, some of these things happen that should happen, because again, basically, pretty much you're down to either your left or your right, and that's it. Of course, this might be the thing that just breaks it apart and does actually, maybe, although it might do some damage in the short term, I think it might do some good in the long run, because maybe finally we'll get some more representation and get some other things to vote for, and get some people that actually really want to be there and aren't interested in just stealing our money. I mean, again, I think that's one of the big things. Again, you go back just a moment with these trade wars. The biggest deal being made on the trade wars is by the politicians and the lobbyists, who have direct financial benefit. I asked a question. I hosted a farm radio show the other day, and I asked a question. Okay, are you being hurt this much by the tariffs? Okay, or are you being more hurt because you've had great crops for the last 3 years and there's not as much demand because there has not been any weather issues to delay? And of course, the answer that I got, and again, I'm not saying this is the 100% answer, but the answer that I got was it was more because we're oversupplied. And we're not oversupplied because of the tariffs. We're oversupplied because basically production has been outstanding. So that's one of the issues that we look at. And again, I just look at it from, a pretty simple point, okay, that again, too much supply, nothing to bring it down, and that's what causes it, and it leaves it for the politicians and the lobbyists to cry and whine and say that how bad everything is. But yet, from my hearings, it's not all that bad based on it. We've had the report of farmers are in trouble and the whole, because of the tariffs. And I would say this: I think the farm community is more in trouble from the corporate farming that is buying up land at too high prices and then basically putting everybody out of business by having such cheap labor and be able to do so much production. But again, that's another story for another day. But those are just some little thoughts here. When I look at this whole picture, okay, again, things don't add up the way that they're trying to sell it. And I think this whole tariff and trade war thing, I think what it's really going to do, and they've already braced you for it, is you're going to be paying more at the store. You're going to be paying more in other areas, so-called because of the tariffs, okay, which I think is a bunch of bull. And I don't think it's really, it has affected yet. And I think that this is the same thing that we saw in the 70s and 80s with gas prices, when OPEC held us hostage and all the oil companies raised their prices so fast and made record profits. So I would not be surprised to see the same thing repeat itself, because again, this gives many companies the rights to start to raise prices, which I believe will really help their bottom line, not the bottom line of you and me, okay? And I think that they're just going to say, they're going to arbitrarily raise, well, because of the tariffs, we have to raise the prices here. So we're going to pay 10, 12, 15, 20% more for goods. It's not going into the tariff, it's going back into the corporations. And again, this is the whole deal here, which allows them, because they've got now a built-in excuse. What are we going to do? Lie and say we're not? And of course, this goes back to the example I've used many times here before, which is Starbucks. Every time coffee went up, they raised prices. But did they ever bring prices down? No. So again, I think that is a big issue. And of course, I think it's just a way for us to be handled once again from those that have control. And this goes into the whole situation, as we look at what the Fed has done and their potential talking about ongoing permanent QE, quantitative easing. Okay, I'm wondering what happened to the free market system. Okay, what happened to letting the markets to dictate everything? I mean, right now they're being forced to let the markets decide wages. They're letting the markets they're being forced to see what's going on, because of course there's not enough help for the jobs that are available. So employers are having to pay more, which is what should happen. Okay, notice how we got up to that minimum wage number that all the people on the left wanted to guarantee, but because there is a demand for jobs, we have gotten up there through the free markets. But that is one of the few places that we're still seeing free markets. Okay, and I think that becomes, of course, another issue. And what happens when the quantitative easing fails. It will fail, as it has always done, okay? Profits around the globe are much lower. And even our profits here, yes, we have had a good earnings season. Why? Because the bar was lowered so much, okay, that it was hard not to get over it. So why do we, again, we get this artificial news that forces you to drive into markets. In the meantime, nothing much has changed. Okay, and again, I am not telling you that the markets can't go higher, because they certainly can. But of course, you now have, of course, Bernie Sanders stepping up and saying that it's time for the super rich to do the morally right thing. Okay, what is the morally right thing to do? They pay their taxes. Okay, they spend money. They have companies. They create jobs. I mean, again, this is what we are up against right now. We have a bunch of people out there that would like to recreate what it looks like in Venezuela here, because we know that socialism doesn't work. We do have some sort of socialism already in this country, okay, through the welfare system, through all the aid that we give. So we do have some sort of, and who finances it? You and I do, the taxpayers do. And when this whole thing blows up, who's going to pay for it? Okay, that's the biggest story. Okay, is when all this bull clears up, okay, and it finally falls apart, which it will. Look, again, this is not a prediction for tomorrow. This is not anything about the market. This is a fact of life. Eventually, things will fall apart, and who's going to get to pay for it? You and me, as always. And that is always what they're depending on, is that a solid middle class, which they try to destroy many times, but a solid middle class will always foot the bill. But again, I have no problem with people that are uber wealthy. I mean, again, if you've earned it, why shouldn't you keep it? Okay, why should you be treated differently because you happen to have been more successful? I can't fault that. The only thing I can say is I wish it was me. Okay, I'd like to be the richest man in the world. But again, I think that is something that we take advantage of. And again, why do you want to penalize the dream of being that great entrepreneur and getting to that level? I think that's always a tremendously big mistake. And of course, I find it frustrating that we even have to tolerate this crap, but that is exactly what we have to do. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horwitz. We're going to stop out of here for a break. We will be back with more of Bubba's Bottom Line after the break. Hey everybody, what's up? I did a great hedging webinar yesterday on Saturday, and if you'd like to get a copy of it recorded, no charge, all you have to do is email me at bubba@bubbatrading.com. If you'd like to get Bubba's daily update, which is now based on a subscription model, you can get the special pricing, which is, I think, $5.99 for the video and daily text. You can go to bubbatrading.com/video SMS, and you can get the daily update. Of course, Bubba's Bottom Line is still and always will be free. And of course, don't forget about our high school investing program. You can help us out at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, markets continue to soar. Again, we're not getting away. We said this early in the show. We're not getting away from the market. Again, remember, okay, investors should try to stay in the markets at all times, certainly using my hedging model. But again, markets go up 8% year over year, just not every year. Okay, in fact, I did Charles Payne. I was on Making Money with Charles Payne on Friday, and he says, well, we're up 12% this year, or whatever it is. Can it go higher? Look, the market can go up 20% this year. There's no limit to how much it's going to go up, but over time, it will average somewhere around 8% annually. So again, I can't say that the market will stop going here. I can see a lot of reasons why it should, and I can give you a lot of reasons why it should. Lack of volume, lack of volatility, okay? We're ignoring all the bad news. I mean, nobody cares about the retail sales number that we saw on Thursday. And of course, there's a lot out there saying, oh, well, the number's wrong. Okay, well, the number's wrong. I mean, have we seen these government numbers anyways? I mean, they're always being adjusted and updated anyway. So is it wrong? I don't know if it's wrong, but that's the number they showed. And that's what we said all along, that sales were okay, but what they really did is they spread them out over a longer period of time, so they made the actual fourth quarter number smaller. But again, markets reacted a little bit and then took off. Friday morning, the markets were getting clobbered about 2 o'clock in the morning, and they ended up 400. So again, I'm not telling you this market's not going higher. I certainly wouldn't do that. And again, I'm a long-term believer that we're going higher. But again, obviously as a trader, right now, as a trader, I would be looking for some things, for this to peak at some point. But in the meantime, we're staying long with some of our short-term positions until the markets tell us that it's not going to go up anymore. And right now, again, with the markets closed tomorrow, it's Monday, it's President's Day. I don't know. I urge you never to try to predict and tell the market what it's going to do, because the market's going to do what it's going to do, and the market is always right, and the market never announces its next intention. The only thing we can do is continue to keep you updated based on what we're seeing, and we have said this basically almost every day, okay, is we're going to observe the market. It's still going higher. We're staying long. That's basically what it comes down to. Now, interesting, as I mentioned earlier, the bonds have really gone up fairly significantly, which has brought interest rates down. In fact, I think the 10-year is back to about 2.6, and I think the 30 is back under 3%. Okay, so to me, that says there's a little bit of fear out in this market. Okay, to me, that says there's some concern. You tie that in with the stronger dollar. Okay, now the dollar came down to 95, and the Fed has done its best job at trying to manipulate and keep the dollar lower, but yet here it is back up at 97. Okay, looking like it's going to par. Now the dollar and gold and bonds are considered potential safe haven investments. Now, I know bonds I agree with, and the dollar I agree with, because that's where people go for safety. Gold, I'm just a fan of gold. I own gold. I like gold, but it's not going to protect your portfolio. So in the meantime, we've got these fear assets that are also railing at the same time, which again does not make sense. But again, remember, okay, stay away from the correlation part of the market, because they may correlate over time, but they ain't correlating today. And this goes back to, when the dollar was at 88 cents, okay, gold was at 1,300 and change. Now the gold is at 97. Gold is back to 1,300 and change. So again, don't confuse the facts and what the market's telling you with what you've heard. It does not work that way. It may work over time, but it doesn't have to work today. So gold continues to try to break out. Now, I think last week there was a couple of scary moments in gold. Now, we've been long gold since 1180, okay? And there was a couple of scary moments. We've been watching that 1310 and April gold, and 2 or 3 times last week it came well below it, like the 13, I think the first one was 1306, then 1307, and then 1304, which is not always a bullish sign, but managed to close above 1310 each and every day, and then pushed up and closed almost on the high of the week on Friday. So again, gold looks pretty solid, and it looks like it's going to the next target that we would see, which would be 1350. Okay, again, we think that gold's got a chance for the 1400s this year, and maybe higher, but I'm never going to tell you that it's making new highs. People email me all the time, it's going to 5,000. Okay, I'll say all you want right now at 2,000. So again, I think gold looks, solid. We're sellers of bonds and not very comfortable at the moment, but we've been short the bonds. Oil, crude, continues to try to push higher, and it's really in a very tight consolidation period. Tried to break out on Friday, and it actually had a little bit of a blow off and then came back. We'll see. Again, you got rig counts coming back. I think this has been more of a move that was driven more by the producers trying to get higher prices so they can sell futures. We're going to stay short here, although a little bit, again, if we get too concerned, we'll close out and start over. Again, that's one thing you have to remember about the markets is if you're getting to a position where you're getting uncomfortable, then you sometimes need to close that position and start a new one. Okay, look for a new entry, and I think that's something that we'll look for. In the meantime, the grains had a rotten week, I guess. I mean, wheat looked pretty good early in the week and then got clobbered Thursday, Friday, closed right on support. In fact, it got scary in wheat closing. It went below 5 before closing above 5. Soybeans still look pretty solid, but they're in consolidation. Corn is still holding that support level. So again, we're still very, very comfortable. I mean, we obviously would like to see them going higher, but we're very comfortable holding and looking for opportunities to buy more of corn, wheat, and soybeans. The meats continue to kind of churn. If you look at the feeder cattle is kind of in that bigger range, 141 to 147, being up and down like a yo-yo. I got hammered Friday, but it hadn't violated support. Fat cattle or live cattle tried to push up to the upside, failed a little bit, but again, holding beautifully on an uptrend. And hogs we're not in hogs, as you know. We got out. It's ugly. Now, it looks like they may have found a potential bottom. So we'll continue to observe there, but we are looking for a spot to potentially get in. And I think that we will find it eventually. But the other stuff, again, you got to let markets trade. You got to let markets tell you what's next. Okay, that's the more important part. You've got to let the markets give you the best idea. Now, we talk about, it started out with the Greenspan put, the Bernanke put, the yellow put, now you got the Powell put. So what happened to Jerome Powell that he became from a normal human being business guy that was in the industry, all of a sudden decided to become this major dove? Again, I wonder, and I'm wondering how long they can keep it out. We're hearing a lot of very similar things to things that we heard in 2008 and things that we heard in 2001. And, we were heard all throughout history. We're getting a lot of reassurances of how good things are. But with the lack of volume and the lack of volatility, this whole rally looks like it's more of a retail rally. This rally looks like it's bent on being the final push and getting ready to fail. And again, we're not predicting, be clear, okay, we're still long, but it looks to me that we're being pushed up by a lot of retail trade. We've got margin debt at record highs, okay? We've got corporate debt at record highs. We've got credit card debt at record highs. So what does that all mean? I mean, it just means that, look, we can ignore it. Again, the Fed can ignore it, the banks can ignore it. But again, I've said this before, and I will say it again. I think the banks are not as liquid or as strong as we think they are. And of course, when guys like Treasury Secretary Steve Mnuchin come out and tell us that everything is fine, I always seem to have a problem. We're worried about when everything is fine. Okay, so I think that to me, there's always issues to think about. However, again, you stay the course and you look at things that are going to be the best for you, and by understanding the read of the market and the chart pattern, that gives you the best idea. So again, we will stay cautiously long. Okay, we're not in a hurry to get short the market because there's no reason to. So you've got what we think. You've got our calls. We're going to step out here for a break. This is Bubba's Bottom Line. Todd Horwitz will be back with my commentary after the break. This is Bubba's Bottom Line. Todd Horwitz. We will be right back. Hey, everybody. If you'd like to get a recording of the webinar I did yesterday on hedging, it's free. All you have to do is email me at bubba@bubbatrading.com. I will send you a copy of that webinar at no charge to you. And of course, we did the futures last week if you'd like that one. And of course, don't forget about our high school program. If you want to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, don't forget, if you like to get the Bubba daily updates with the text messages, go to BubbaTrading.com. It is now a subscription based. So look forward to seeing you there. In the meantime, Bubba's Bottom Line will remain always free. And we'll be back to get back to the show with more of Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, the big stink this week was about the national emergency called by President Trump to build a wall. And somebody came up with the idea that if we can get El Chapo's money, we can use that money to build a wall. But I love when people call President Trump an idiot. I think it's really kind of comical when you actually look at some of the things that have been done through here, some of the regulations, all the things that have actually improved the overall economy. Now, listen, I'm not a big fan of the debt. I'm not a big fan of a lot of it, but I am a big fan of borders, and I am a big fan of getting things done. But I think that if you look back in history, okay, you can go back to 1976. There have been 58 presidential national emergencies, with President Obama having 13 of them, okay? So, again, you may or may not agree that there is a need for a wall, there is a need for borders, okay? That is obviously the beautiful thing about being an American, is you get the right to have your opinion. I believe that he did the right thing because of, and again, whether you like him or not, but I think he did the right thing because of the resistance he is getting from the left, okay? They have already approved this spending and this money years ago until it was President Trump in the White House. Now, you have to ask yourself, you can think whatever you want about President Trump. Again, we're a free country. You get to think what you want. But you have to ask yourself the question, why is this president, out of all presidents, get so much more resistance than any of the others? Why is there so much hatred for President Trump? Okay, again, you can give me all your reasons. I'm sure I'll hear from you, those that that disagree with what I say here. But I gotta wonder. I mean, to me, okay, it seems to me that he's doing a decent job under the circumstances of what he's got to deal with. Okay, forget about what he talks about the economy, all this stuff. To me, it seems like he's tried to turn things around, and it seems to me that all the people on both sides of the aisle that are against him because he may be cutting into their future pay because of some of the changes that he's making. So again, I just have to wonder, but to make a big deal about this national emergency, okay, which has been done 58 times since 1976, to me is ridiculous. Was DACA an emergency? Okay, again, personally, I believe that that the people that are here should stay here, and they should start from today. But that's a story for another day. Again, I don't get a vote on policy, but I do get a vote, and I do think that I have no problem with the national emergency. I would like to see them to try to work together more, but of course we know with Schumer and Pelosi, it's never going to happen. Have a great weekend, everybody. This is Bubba's Bottom Line. Todd Bubba Horwitz. Hope you enjoyed the show. We will see you back here next week with Bubba's Bottom Line, and on Tuesday with Bubba's Daily Update, because Monday is a holiday. Tomorrow is President's Day. Have a great weekend, everybody. Thanks so much. We'll see you later.